Hello everyone, welcome to Accounting 210. In this video, I will talk about two problems in chapter 2. The first question is from your textbook, question 44. There are different requirements. So in this question, it basically asks you about the income statement. So the first question said, on December 31st, there is a company that is the retail shop. So that is merchandising type, right? In chapter 2, we talk about 3 types of firms. And so we have all this data. It said prepare income statement for the company and then a merchandiser. We said for the income statement, you first write your the company name, and then we say this is the income statement. This is the year ended December 31st, 2016. So those are things you should know in your financial accounting class. How do we get merchandiser's income statement? Basically, it's your revenue minus cost of goods sold gives you gross margin, gross profit, minus all of your operating expense, right? We minus all of the operating expense, that gives you operating income. So we go through all the data and then we say which where we put the numbers. Revenue 53,000, so that is our 53,000. And then utility for shop, so that will be our operating expense, right? So that is our operating expense, 1,100. So 1,100. Inventory, so this is our ending inventory. So this is inventory ending. We have the inventory at the beginning. And then rent for the shop, that is also our operating expense, 4,600. And then we have sales commission. That is our operating expense plus 4,000. So those are our operating expense, which is the period cost. So they should be expensed in the same period. That is our period cost. We also have our purchase. So for merchandising type, they only have one type of the inventory, which is the inventory. You go to Walmart, you will see they have dresses, they have bags, they have like whatever they have. Those are the inventory. And how do we get the cost of goods sold? We said the general flow is in your balance sheet, right? In your balance sheet, you have the inventory sitting in your warehouse as the assets. And when you sell your inventory, it will become the cost of goods sold. So that is the cost of the goods that you sold. So the inventory will become the cost of goods sold when you sell the products. For merchandising, we said how do we back into get the cost of goods sold? So basically, it's your beginning plus your purchase, right? Gives you goods available for sale. And then they have 2 places to go. Either they are sold as a cost of goods sold, or they stay in your warehouse as the ending inventory. Think about this, right? Okay, so I just have these pencils. Let's say at the beginning of my year, I had these 2 pencils. During the year, I purchased 1, 2, 3 more. So now how many pens I can sell? What's the maximum number I can sell? So I have 5. Where those 5 pens can go, they can either be sold, became the cost of goods sold, or if they are not sold, they will stay in my warehouse and become the ending inventory. So I just say during the period I sold one pen, so my cost of goods sold will be the cost of this pen. and all the other 4 are still sitting in my warehouse as the ending inventory. So that is how we get our cost of goods sold. So if we put these numbers in the formula, we said beginning we got 12,000 of inventory. We purchased the 36,000. So we totally have 48,000 available to sell, right? We can only sell 48,000. We cannot sell more than 48,000. We cannot sell 50,000 because the maximized number we have is 48,000. Did we sell all of them? We don't know. But at the end of the year, we go to our warehouse. We counted the inventory we have. We found out, oh, we still have 9,100 sitting in our warehouse, right? So we still have 9.1 thousand. So what the cost we sold, what the goods we sold will be 48,000, subtract this 9.1 thousand. So that will be the cost of goods sold. So which is 38.9 thousand, which is 30.89 thousand. So how do you calculate? It's 48,000 subtract 9.1 thousand. So that gives you cost of goods sold. Okay, so we carry that number, we put that as our cost of goods sold, minus 38.9 thousand. We got our gross profit, which is 14.1 thousand. We subtract all the period cost. So our operating income is 4.4 thousand for the merchandising type of company. So one quick review, we said for merchandise, it's beginning plus purchase gives our ending plus cost of goods sold. And then we said for merchandising type, their inventory, their product cost, right? Their product cost is the purchase. So, but it still has 3 parts. So the purchase price, the shipping cost, and if it's purchased from outside, you have to pay customers or duties. So that is very straightforward. Okay, so now we keep going. We go to the next question, right? So you look at the question first, and then now it became the manufacturing company, and then it still asks about to prepare our income statement. So for manufacturing company, the income statement is a little bit complex because for manufacturing company, right? For manufacturing company, we said, so still the same logic is your balance sheet. Your inventory once it's sold will become your income statement, cost of goods sold. So your inventory will become your cost of goods sold. And then you still have your revenue minus cost of goods sold. So gross profit minus all of your operating expense. So that gives you operating income. But why is a little more complex? Because for manufacturing company, you have 3 types of the inventory. So let's say, so I'll just make an example. So luckily I have all these pens with me. So I'm the manufacturing, I manufacture the pens, right? So I have 3 different types of the pen, the inventory. So the first is the raw material. I cannot show you raw material, but let's say like for all the plastic, you know, so those are my raw material. And then I have all the colors, you know, ink. So that is my raw material. So I have raw material as my inventory. And then I also have halfway made. Products, right? So as we say, instead of finishing this one or that pencil, I just assembled the ink. I haven't put the color on it. So that is just halfway made products. So I have the raw material. Let's say just say plastic. I have 2 halfway made pencil, and then so that's called work in process, right? So I have raw material inventory. I have work in process. Inventory, I have finished goods. I have finished goods. So I also have finished goods inventory. So I have 3 types of the inventory. So when we prepare for our income statement, we have to get the cost of goods sold. We don't get cost of goods sold immediately. So we cannot just say, oh, you definitely you sell your finished goods, right? You cannot say you're manufacturing this pencil and you sell to Walmart, just the halfway made pencil. Walmart will not pay you. So we have to sell the finished goods. So when we sell that, we do beginning plus production equals to ending inventory plus your cost of goods sold. But how do we get the finished goods? So the one more extra step is we have to calculate the finished goods first. Okay, so how to get the finished goods, right? So that's the flow of the cost. Also, that's the flow of the cost. So how to make the pen, how to make the pencil, how to make the pen, right? So we start with the direct material because that's basically the raw material. So you have a direct material. The flow is like that. You got the direct material, as I said, you got the ink, you got the plastic, you know. And then you move all this direct material from the warehouse to the production department, and I say to the production department. So that will become your work in process, right? So that become your work in process. How do we convert all the raw material to work in process? We have to put direct labor. Someone has to assemble the ink, right? And then we also have to use manufacturing overhead. We have to use a machine, we have to use insurance. So those are manufacturing overhead. And then it's work in process, right? Work is halfway done, so we didn't put the cover. Once you have the work in process, we work on those pencils day and night, we will have the finished goods. We will have the finished goods. So it will be all finished. I say it will be all finished. Then we can sell them. Then we can sell them to become cost of goods sold. So we have to calculate the finished goods first. Okay, so that 3 parts are your 3 different types of your inventory in the balance sheet. So 3 steps. So first, we said we want to know the direct material we used. We want to do each one. We have 3 types, so we have to do 3 steps, kind of. So the first step is what's the direct material used. We have to calculate, hey, in order to make this finished goods, how many pounds like plastic, you know, I have used for this pen. And then once you get your direct material, you have to add your direct labor. So those information will be given to you. So you don't need to worry. So you have to calculate direct material used. And then the question will tell you, hey, you incurred $20 of direct labor, you incurred like $50 of manufacturing overhead. So second step is you have to calculate the products manufactured, right? Manufactured. So the products you produced, kind of like your finished goods. So that is you have to calculate your finished goods. And then third, from the finished goods, we calculate cost of goods sold. Okay, first one, direct material. So I go through the numbers first with you, and then we go back to our 3 steps. Utility for plant. So that is our manufacturing overhead, right? Utility for plant. Delivering expense, that is our period because it's not related with our production. Sales, so that's our period. Plant, that service is manufacturing overhead. Work in process, so this is work in process at the ending inventory. And then last year's ending is your this year's beginning. So you have finished the goods beginning inventory. You have finished the goods end of this year. So this is your revenue, customer service. This is your period, direct labor. So this is your direct labor. And then you have direct material. So this is your direct material you purchased. And then we have rent on manufacturing. So this is our manufacturing overhead. Raw material inventory. So that is your beginning of the year. So we have the raw material, direct material, beginning of the year. We have direct material ending inventory. Oh, that's a lot, right? And then we have our working process at the beginning of the year. So we have all this information. So first, to get the direct material used, we still do that, right? So beginning of the direct material plus our purchase. So that is all the material we can use. So we used them. Either it will be used or it will be your ending inventory, right? So we said I'll just make up like an example. So at the beginning, you had two covers, like head of the pen, and then you purchased one, and then you don't know how many you used, but at the end of the year, you go to your warehouse, you found only one cover is left, so definitely you used two, right? So this is how you get the direct material used. So we go to all the numbers, get the information, plug all the information. Direct, so we only look at direct material. Direct material purchased 30,000, so we put 30,000 there. Direct material beginning 14,000. Direct material ending is 8,000. So how much is used, the direct material? I don't know, I need to calculate first. So we used 36,000, right? We used 36,000. Beginning plus purchase equals to ending plus your used. So 14,000 plus 30,000 minus 8,000. So that's the calculation part, that's the math part. Okay, so we got the direct material used is 36,000. Put that aside, we will use the number later. The next part, we do the finished goods, goods that are finished. How do we get this number? It's also similarly, what is the cost of goods manufactured, right? So how do we get this number? Is basically you start with the work in process beginning, and then you add all the work you have done during that period. So you add all the work in process like during that period, right? So that will give you the total manufacturing cost to account for. So either they will be finished as the finished goods, or they will not be finished. That will be your ending experience or ending balance of your working process. So what does this mean? What does this mean? You say, this part is a little confusing. Okay, so let's say we still use this as example. So at the beginning of your period, like 2017, in your production department, at the beginning, you had this two working process pencil. Why is working process? You can see we didn't put a cover there, so right, it's not finished. And then during this period, you have been working on them, right? So you have been working, so you put this cover, you put this cover, but you don't really just finish those two. You have new things, right? So you made another new one, and then you made another new one, and then you made another new one. Let's say you made another new one. I'm not going to put the cover now, but you made all this, right? So you made all this. So what you did do during the period is you put the two covers. So that's your work. You have to work, right? You have to work on those things. So at the beginning, what you had is two work in process. It's two work in process pen. And then during the period, you put the cover, you finish those two, and then you work on 3 new pens. And luckily, you finished one, Then you finished another one also, but the last one is not finished. The last one is still work in process. So what does that mean? So at the beginning, you had two work in process. You had two work in process. Those two halfway done pen. And during the period, you worked on them, so you put a lot of work. So how did you put? Is you have to have the direct material. You use the direct material. You use the direct labor. You use the manufacturing overhead, right? So during the period, you put all of those costs to work on your products. And then at the end, you go to your production department, you found out, oh, my working process only has one left. And then you can figure out how many you have produced. You have produced 4. You have produced 4. So that is basically how you get your finished goods. So let's put the numbers, okay? So let's put the numbers. We will say work in process. We look at the information about work in process. At the beginning, our working process, you look at our working process at the beginning, it's 0 because it's a new company. There was no working process at the beginning. And then during the period, we put direct material, we put direct labor, we put manufacturing overhead. And then we said our direct material we used, you already knew, is 36,000. So we put 36,000. We also put direct labor, and the question told you direct labor directly. We use the direct labor of 23,000. And then we also used the manufacturing overhead. So we used this one, 4,900. We used the manufacturing overhead, 1,350. We used manufacturing 9,600, right? We used manufacturing 9,600, and then 1, 2, 3. So yeah, so we have 3 parts of the manufacturing overhead. So if you add all this, that's all the cost we incurred during the period. At the beginning, it's 0. During the period, we spend all this money. So totally, we have this cost called 74,850. That is the total manufacturing cost to account for. Total manufacturing costs to account for. What does this mean? So you put all this money, you put all the costs, they only have 2 choices. Either they will be finished goods, or they will become the new work in process, right? So at the beginning you said you had 2, but those 2 are done, but you have another new work in process product. So we look at all the information from the table again. The question told you said, your work in process at the ending is 5,000. Your work in process inventory at the ending is 5,000. So that gives you 5,000. So your total finished manufactured products will be your 78,850 minus your 5,000. So during that period, you have created $69,850 of the finished goods for that period. So you have manufactured finished goods during that period is 69,850. So that is our second step. That's the products we manufactured, we produced during that period. Okay, So we put that number also on side. We will use it later. And then the last step is to get our cost of goods sold. So we said it's very similar with the formula of the retailer. So it's your beginning of the finished goods now plus your production equals to your ending or the cost of goods sold. So we found out our finished goods at the beginning is 0 because it's a new company, right? And the finished goods at the end of your period is 2,500. And we knew during this period we have produced $69,850 amount of the production. So your beginning plus your production will give you the total amount you can sell. We don't know how much we sold, but we know at the end of the period, we go to our warehouse, only $2,500 amount of the product left. So what is the cost of goods sold? Will be $67,350. So how do we get this number? Is $69,850 minus $2,500. So you get your cost of goods sold. So this is how we get the cost of goods sold for our manufacturing type of the company. It takes more practice compared with the merchandisers. So always 3 steps. First, how do we get our direct material used? Beginning plus your purchase gives you all the direct material available. Either you use them or you put them as your ending inventory. Second, how do we get the production in this period? If we have we have to start from our working process, right? So we had just 2 halfway made pencil. We put direct material from the first step calculation. We put direct labor, which will be given to you, and we put manufacturing overhead, which you have to kind of summarize and classify first. So at the beginning, you have that working process. You put so much money during that year 2017. So that will be the total cost account for. So either those products will be finished, which will be the products we manufactured, we produced the year, or will be the new work-in process, the ending inventory of your work-in process. So once you get that step, you will get the production during the year. And then we do the third last step. It's your beginning of your total finished goods plus your production in that period will give you the products available for sale. So either we sell them to become cost of goods sold, or we leave them as our ending inventory. Whew. Okay, so now we do our income statement for the new company, for the manufacturing, right? So we do our floral, and then this is your income statement. This is the year ending 2017. And then we have our revenue minus cost of goods sold gives us gross profit minus all the operating expense gives us our operating income. So revenue is from here 104,000. 104,000. We know our cost of goods sold. Finally, we calculated from 3 steps is. Oh, sorry. What? Why I put here? That's your finished goods. So I need to put the cost of goods sold from here. Sorry about that. Sorry. My fault. Sorry. So minus my cost of goods sold, which is 67,350, gives you gross profit 36,650. We minus all the operating expense. So we have 1,500. We have 4,300, and then we have 1,400. So I think those 3 parts are our period cost. So we have all that, we add them together, we subtract 1,500, 4,314. So that will give us total operating expense. We subtract that from our gross profit. We got our operating income, $29,450. So that is our operating income for this manufacturing company. And then the next one said it's different because for the merchandiser, you just calculate your cost of goods sold directly from your purchase. For the manufacturing, you have to use direct labor, you have to do the 3 steps, you have to calculate direct material used, you have to calculate the production you produce, and then you calculate your cost of goods sold. And then the third question asking you about the balance sheet for the inventory. So we said for merchandising, the ending inventory is the thing they have, they didn't sell. So for our merchandiser, the ending inventory will be just our ending inventory, 9,100. But for our manufacturing company, the inventory has 3 parts, right? We said you have the raw material or direct material, you have your work in process, and then you have your finished goods. So let's say you may have your raw material, you have 2 work in process, and then you have 3 finished goods. So we have to put all the information on your balance sheet as the ending inventory. So the raw material is, so we said that the raw material, so we look at the direct material ending is 8,000. And then so we put raw material ending, just this one, right, is 8,000. Work in process ending, so it's 5,000. So we have these 2 work in process, that's 5,000. And then we have finished goods ending inventory, 2,500. So that's our total inventory for our manufacturing is 15,500. Okay, I hope this video helps you to understand the income statement. You definitely will have a related question, especially for the manufacturing company. I know that's the hard one, but I believe you can do it. So practice more and let me know if you have any question. I'll see you in the next video. Thank you.